Good evening. We're going to start on time so that we will have time for you to ask plenty of questions for the Q&A session. And I am so delighted on behalf of Asia Society Hong Kong that we can host tonight's program on the topic, Fighting for Fabs, TSMC, and the Contest for Advanced Technologies. I know you are all very interested in this topic. That's why you're taking time from your busy schedule to be with us this evening. And this is a really timely topic. TSMC, I think, is a company that needs no introduction. And we're really very fortunate to have two wonderful speakers. Dan Heyler, Dan is the technology analyst and portfolio manager of Isola Capital, and their global technology alpha fund. And I know Dan for many years. We were fellow classmates from our Kellogg ASHK USC program. We were part of the inaugural class. And this topic, or this series, has come about because the program is now over 25 years old. And there's a lot of expertise among our alumni. And when we were talking about this topic, Dan kind of volunteered himself, or I volunteered him. I can't remember how that came about. But we thought this is, especially tonight, 2 days before the election in Taiwan on Saturday, to talk about this very important topic. And by the way, when I was back in New York for the Asia Society Global Trustee meeting in October of last year, Morris Chang, Dr. Morris Chang was one of our speakers. He had a wonderful, engaging program talking about leadership in a fragmenting world. He was on a program with Joe Tsai. And so those of you who are interested in hearing watching that program, you can watch that online on Asia Society website. Morris in conversation with Joe, moderated by Global Trustee Ida Liu of Citibank. So what tonight's program is going to be, I'm personally looking forward to it. As somebody who was born in Taiwan, grew up in the States, I still have a lot of families in Taiwan, and they're all fighting among each other about who they're voting for. So I know this topic it's not just here that we're interested. I know in Taiwan, in the U.S., the technology, kind of this technology issue and the contest for advanced technologies is something that I think we're all interested. But it was 2 years ago when I was back in Ohio. I'm a Buckeye, Ohio State University. The president at that time of the university announced that Intel was going to come in and build, spending about, I think, $20 billion to build 2 fab factories in the state of Ohio, in a county right next to Columbus. And so you know that this topic is not just TSMC Arizona, but is also Intel, Licking County in Ohio. So I think these are speakers tonight, Dan and Ken Poon, founding partner of XCap Partners, will kind of shed light on this particular issue. And I'm very happy that Asia Society Hong Kong can play host. And for those of you who are also, after their discussion, we're going to have a full hour, discussion with them, along with the two of them in dialogue, as well as Q&A. We have a very special guest. He's going to join us in a little bit, and that is Ambassador Kurt Tong. Kurt is in town. I think he was just in Shanghai. And those of you who know Ambassador Tong, Kurt, before he became managing partner of the Asia Group, was no stranger to Hong Kong. He was the Consul General of U.S. Consul General in Hong Kong from 2016 to 2019. So Kurt is going to give us his perspective from Washington. He's now based in Washington, so stay tuned. The program will run about 15, 20 minutes later, and then you can we'll have a drink reception. The drinks will be waiting for you in the back, and so you will have an opportunity to interact with our speakers. And so again, I want to thank you all for being here. And another plug, January 26th on Friday, David Lee, who's our PC member and our counsel, David is going to be doing a program for us about the result of the Taiwan election, kind of give us an analysis. By then, it will be 2 weeks out, almost 2 weeks after the Taiwan election, and kind of give us an insider's view on, interpretation from the election. So that will be Friday, January 26th mark that on your calendar. And without further ado, I'm going to invite, I think, Dan to come up and to get the program started. He has a short presentation. And again, thank you. Enjoy the evening.
Thank you, Alice. Should I stand at the podium? I think this works better. Great. Okay, good. Well, good evening, everybody. This is I'm Dan Heyler. This is a very hot topic. Alice, I think I invited myself to this. It's a topic that has been a little frustrating for me, to be honest. I think there's a lot of misinformation and a lot of populism that is creeping into this situation. And specifically, a book called Chip War, I think, is when I really kind of hit the ceiling and decided to publish something at the American Chamber of Commerce. The title itself, Fight for Fabs, isn't quite as extreme as Chip Wars. We have a good turnout today, and that's a topic that is catchy, right? And it's a topic that we will refer to fighting for Fabs or Chip War as something that's very catchy. However, the idea of framing this discussion from the standpoint of a failed U.S. industrial policy that could have, kept technology within the U.S. and somehow we need to reverse this and bring it back, is a totally misguided framing of this discussion, and it will exacerbate the situation severely. So while I've titled this Fight for Fabs, actually what I'm telling you is that this is the outcome of what we see today is a function of purely economics of the electronics industry and an outcome that cannot be reversed, and it's an outcome that actually needs to be accelerated as opposed to reversed. So I will walk you through the supply chain, how we are today, where we are today. I am looking at this from kind of three perspectives. First, as a background, recently more as a portfolio manager, where we do have to take into consideration risk, economics, much more so than as an equity analyst at Merrill Lynch, where I was there for 17 years. That role as an industry specialist is very much about identifying long-term megatrends in technology and who the winners and losers are going to be in those markets and getting your numbers right and trying to predict what's going to happen with the share price next. And I don't want to call out Merrill Lynch alum in the audience. Good to see you guys. And Kellogg alum, as well as even some Bowdenites. My alma mater is Bowdoin. The other perspective, finally, is as a tech analyst at Gardner Group, where I started in Silicon Valley. And that as a consultant to Asia governments and Asian companies gave me much more of an inside industry perspective. So kind of today you'll see a top-down, bottoms up, and inside-out view of technology. I hope will be helpful. And I worked with Morris for about a year. I had a few projects for TSMC in 2016 after I left Merrill Lynch. Very happy to have Ken, who will be coming up shortly. Ken and I were partners in crime at Merrill Lynch. He handled origination from 2008 onward. TSMC sold, Philips sold a number of shares, a lot of shares, from 51%, and Ken executed, and we were number one a number of years there. And Ken currently is runs his own boutique ECM market maker, and is a very strong guy with regard to technology. He actually has been on major deals in Alibaba and TSMC. So he's really a guru of the industry, and we look forward to a lively Q&A. I hope you won't be too hard on me. Take it easy, Ken, but we look forward to the Q&A. So I'd like to start with my conclusions, and then I'll get to kind of supporting these. First, the winning formula for global technology is and will remain a disaggregated supply chain, meaning levels of the supply chain, with cooperating and competing specialists, as tech complexity is merely going to accelerate and markets will continue to shift at a faster and faster pace. Going back to a top-down, vertically integrated model, whether government-driven or company-driven, will waste a lot of money and resources. Globalization was the important part of that. That was really the fuel on the fire, the ability to move resources all around the world, talent, manufacturing, expertise in a trade-free environment that we all benefited from for the last 30 years. And hence, we all, I think, share a bit of angst about the current situation since we've clearly been beneficiaries of globalization. top-down efforts will fail, as I said. Ultimately, this is really about a chip piece, referral to chip war. The only thing that's going to work here to drive the next wave of global economic growth for the world, really, is a continued openness and production and innovation in this disaggregated supply chain. So in order to kind of come to the final conclusions, we all really need to understand is, where are we today? How significant are each of the respective players in this political battle? How did we get here? Where are we headed? And who wins and who loses? So where are we? Pervasiveness of semiconductors across the global economy. TSMC has 90% of leading edge, half of all the mature technology. Pretty much game over for the US. Intel's outsourcing. The last hope in US semiconductor industry was Intel, and Intel now is outsourcing their latest chips to TSMC and AI. They're the last integrated maker to really make a stab at it, and because every integrated maker in the US that tried to keep manufacturing ultimately lost market share to those that used TSMC. So you lost share, you had to join the party. AMD is and NVIDIA. AMD is the recent one. So Asia now represents 40% of global electronics production. China is over 50% of production. Taiwan's 30% of that. Sorry, Asia's 40% of consumption. And the rest of the world is in a structural decline. I'll show you some numbers in a second. So first on, let me get some water. So the pervasiveness of semiconductors, I think we're all aware that we've gone through 3 or 4 major waves. The first, Japan, that drove electronics and consumer electronics. Interestingly, when Japan was dominant here, we had this fear of Japan taking over the world too, didn't we? Right? We had, that was like Japan was they bought Pebble Beach, they bought Rockefeller Center, and Japan's going to take over the US, right? Japan's integrated model didn't work. We had the rise of Asia in the compute sector. First, mainframes in the US, military mainframes. Then the personal computer was really when Asia took off with memory and peripherals. And then on top of that, we went into the networking those computers, and the internet on top of that, another 10 years. On top of the internet was the feature phone, and the feature phone onto the smartphone, which became ultimately a computer in your pocket. And then now automotive and self-driving. So where we are today is all of this, as it broadens out, as it's proliferated from very inexpensive sensors that go into your bathrooms and doors and toilets and everywhere. We're going from internet, connected devices as the next wave, driven by AI machine learning. So all of this multi-layer supply chain that goes from low to high, and it's all connected, now being accelerated by AI, ML, we're really at a cusp of an unprecedented tech cycle that we have yet seen before. And the equity markets seem to agree. If you look at the market cap of technology, the technology industry here related to the S&P, this is technology. Last year we're down. This is the S&P. So 42% of market capitalization is technology, and that doesn't really incorporate all of the technology that's used within old companies as well. So this number, if anything, is understated. So where's the consumption of the next wave and today, right? So if you just look at Asia, 30% in 2017, now at 40% of global consumption. The rest of the world is down. Asia's down as percentage. US has been strong due to advanced applications. And in terms of units, this is way understated. In terms of units, because we have much more consumer electronics in Asia, 60% of consumption would be in Asia. Where is it being produced? Well, no surprise. The rest of the world has declined. 2 countries China and Taiwan are about over 50% of the production of all electronics. So when I say electronics, it's any system, anything, a subsystem, a finished system that incorporates the semiconductors in those systems. And it's a remarkable number. And to think that you can reverse that, well, I'll try to convince you in a minute, but it's effectively impossible. If I break that number down in production, 2 countries, blue is China, red is Taiwan, right? Superpowers. That's why I learned Mandarin in college, right? And then Japan, which once was dominant, is kind of, Japan was the dominant semiconductor player as an integrated maker in the 90s. And from 2000 onward, Asia dominated, and components across Asia. Oops. So breaking that production down further specifically into foundry, which is the kind of the core topic tonight. If you were to look at the foundry industry growing here, so TSMC is in blue. So note how TSMC, the gap between TSMC and everybody else is widening. I'll explain why in a minute. But even that position of the other 40% or so is really overstated, because all of these are very small, niche, insignificant players. And TSMC has been able to grow the business to leading edge and lagging edge, and they're the more efficient producer even across the leading edge. So without the scale of economics, you know, these players are marginal players, and there is no such thing as catch-up in the semiconductor industry. There's never been any example of anybody ever catching up, having fallen behind. It's effectively a treadmill strategy. Once you've fallen off the treadmill, you're gone. So how did we get here? We got here first vis-a-vis vertical integration is a model. When we talk about vertical, that's doing the design, the chips themselves, the systems, the software, the marketing. So the vertical integration model worked in the beginning, right? If you think of Japanese electronics, Sharp, Toshiba, they did semiconductors, they did the systems, and they marketed everything. The PC industry, IBM, initially was a vertical. So to get started, because it's new industries, you really need to be able to do everything because no one else can do it. But once you get to a certain level of scale, then companies come in and pick at you at the areas that you're inefficient in, right? And they have hence a little bit of industries that come in. And so the last 30 years, the entire tech industry has been completely disaggregated thanks to open architectures. And ultimately, the fragmentation of markets makes it much more difficult to be vertical integrated, right? Think of how big Apple is. Like, Apple's massive. But Apple's not vertically integrated even, right? They could be. But then their culture would change. They'd go from being a design culture to a manufacturing culture. Qualcomm the same. They didn't want to go into design, so their cultures would change. So, you know, Samsung is really the only example. And reverse engineering companies such as Samsung, such as Huawei, reverse engineering, you got to go vertical, right? You got to be integrated. But the number of successful reverse engineering companies is getting fewer and fewer. In addition to disaggregation, specialization, and of course, globalization enables those resources to be allocated efficiently across the world. Now, going a bit deeper, again, how we got here. So if you think of tech hardware as kind of an upstream, which is components, foundry, the IC design, IP, you know, at one time, all of this, you know, would be done inside one company. You have the application software, the systems, and then gradually over time, kind of one by one would spin out. Now, TSMC was doing a business that existed already. The integrated device manufacturers already had the foundry business but they became a pure play company, and they were really able to drive the economics of the industry. So once an industry becomes so horizontally integrated, right? What happens is the competition intensifies immensely. So you're getting the best experts from the integrated players, from the external markets. They get together, they're the smart guys, and say, let's do this one thing because we know we can do it better than the incumbents. And you get a massive flow of intellectual capital into respective areas of expertise. And hence companies are born out of this disaggregated industry. ASML is a near monopoly. These companies are the leaders in manufacturing. These all used to be part of bigger companies, if you think about over time. The packaging industry, subsystems, integrated in electronic systems and software. So not only do we disaggregate, once you disaggregate, what happens? The big even get bigger, and they get better. 100% market share in leading edge semiconductor capital equipment on lithography. I'll show TSMC numbers. NVIDIA now, #1, just getting stronger. Broadcom and communications. M&A has taken place in this space. Intel, once the dominant integrated player, now has to outsource. Micron, Hynix, and Samsung, only a few players left in the memory area. That is all consolidated. And we're getting increased, we're going to have, in the next area of AI, we're going to have consolidation in cloud and hyperscale, merely because there's not enough chips to go around, right? And TSMC has visibility to the end of next year in terms of lead times. There's not enough AI chips to go around. So it's a land grab. The big can afford them, and they'll put the money, and the big are going to get bigger. This is not something you reverse from a book called Chip War and some policy out of Washington. So how did TSMC do it? Well, Morris Chang, a visionary, observed the founder. He actually worked for the government, URSO. And then he gave him the idea of starting a company. Let's just do manufacturing for everyone else in Taiwan. Let's just do manufacturing. The Japanese that are doing foundry, that is making something for somebody else, they would make themselves, their internal demand come first. But TSMC was a pure play foundry. All the customers were treated equally. All they did was manufacturing. So once they did manufacturing, they were viewed as a trusted capacity provider. Then they became a technology leader. And from a capacity leader to technology leader, now they've moved up and down the supply chain in terms of doing design and other things as well. So they've increased their value tremendously. And again, the amazing thing about TSM is they continue to focus at doing these things and not being tempted to go and do other things. So the consequence of that focus, scale, technology, cost down, has resulted in TSMC growing on a 15-year basis at 15%. So this is some detail here. It's important to get to the crux, because at 15%, they outgrew their customers, right? So the semi-chip companies use TSMC to build the chips. So how can TSMC grow at almost 3 times their customers? Well, share gain. These guys not producing anymore, so they go to TSMC. Also, TSMC has moved up and done more services and design and IP libraries and mask and services. They've pushed up their expertise, so they go in, they've pushed up. Now, guys like Jensen Huang will say, we love that, because we didn't have to do IP, we didn't have to do design layout, the low value add. We became a software company. Like, NVIDIA's been talking to themselves as a software company for years, so they've moved up. So TSMC has been the driver of economics in the tech industry here. Semis have grown pretty much in line with hardware. So where are we headed? Well, I'll give you a negative case and I'll give you a positive case. So I'm personally very concerned about narratives. Every educated American investor or people in media that are involved in this have this mindset that the U.S. has given too much away and they need to take it back, right? It's a scary mindset, because it's going to, well, I'll get into why that's a scary mindset. The other risk is we have overconfidence. The idea that the U.S. can build fabs in the U.S., and this will be in the Q&A with Ken. the idea that U.S. can build a huge industry domestically, or that China can. Both are overconfident in their capability to onshore. The workarounds that we've seen on the technology controls have been creative and are expected. But you can sell more GPUs that are general purpose GPUs to China if they can't get the AI GPUs. But every time there's a workaround, the DOC lifts and attacks that. So it's getting worse and worse as we go on. This is going to result in upward costs for manufacturing, upward costs for semiconductors, slower time to market, far less efficiency. Innovation is clearly going to be impeded. Innovation across a disaggregated supply chain is very important. There's innovation at every level that benefits everyone within that supply chain. And this is a huge negative impact because semiconductors ultimately are the driver of prosperity and the information technology revolution that we've all enjoyed. So who are the winners? Well, I think people in government. It's easy to bash China and blame them for your problems as opposed to addressing your own problems. The defense industry clearly has a play here. And the marginal players will get subsidies where they shouldn't. And it won't help them. I've seen, last 30 years, whenever companies get money from the government, I've never seen a government-funded company ever succeed in this industry, right? For obvious reasons. And the losers are the tech, and ultimately us as the consumers. The positive case, I think is, we heard from Jensen Huang yesterday. It's like, I think you guys need to, you lawmakers need to think about what's going on. I think you're going to see that this is a lot more complicated situation than the lawmakers understand, and the negative economic impact on the U.S. is massive. We've already seen China kind of come a little bit to the table and understand that they need U.S. technology. Xi Jinping has been a lot more friendly recently. And ultimately, if we're allowed to keep the supply chain flowing, technology flowing, innovation flowing, then the big are going to continue to get bigger. We're going to cost down out of the industry, and we're going to have clearly an exciting next 20 years ahead in AI-driven information technology and Internet of Things. So that's it for my opening remarks. These are my conclusions, and I will invite Ken up to the stage as you read those conclusions that are summarized here. I think these are on. Yeah.
Thanks, Dan. It's great to be up here. Hi, everybody. I'm Ken. I think last time we were working together, we were debating about TSMC projections so that I could sell $1 billion of TSMC stock. So it's a pleasure to come back in a different forum to talk about the same thing. I just wanted to give the audience some assurance that you noticed that Dan gave a positive case and a negative case. So as a typical very good analyst, he's sitting on the wall. My job here is to make sure we get him off the wall through this discussion and give you some conclusions so that you know where to put your money, right? So just to set the stage, Dan, that's a great opening and a lot of data. But just to set the stage with a few statistics of my own, China and the US mix about 7% each of the world's chips, right? Taiwan makes 54% of the world's chips. Korea is in second place. But Taiwan makes 80% of the advanced chips in the world. And China consumes 60% of the chips in the world. So these are the statistics that we're working with, and I think it roughly is in line with what you presented. And I think if we were to look at the US policy objectives, I can see two sort of clear objectives of the US policy. And I think it's not debatable, it's quite clear. Objective number one is that they want to onshore chip production to increase their 7% and reduce reliance on Taiwan. So chip security. So that first objective, I would say, is actually not detrimental to China, it's more detrimental to Taiwan, because they're trying to diversify away from Taiwan. The second objective that I can see is they want to restrict advanced chip sales and restrict Western investment and capital in chip companies and contain China's ability to onshore their chip production to satisfy their own chip demand and to provide chip security for China. So they want to keep China contained in its chip industry as the second objective. One statistic that I heard someone say, which was very interesting to me as well, is that China is the largest importer of oil in the world. But the value of the chips that they import to China is actually greater than the amount of money that they pay for oil every year. So they buy more chips than they buy oil, and they're already the largest oil importer in the world. So it's kind of important for China to have a chip industry to protect itself from any sort of shocks in the world. So the overarching question that I'd like us to get to in this session is how successful will the U.S. be in achieving objective number 1 and objective number 2, right? So just getting into it, maybe we can start with objective number 1, which is their wish to onshore the chip industry and make a lot more than 7% of the world's chips in the U.S. on U.S. soil, right?
Yeah. Thanks, Ken. That's great. So I think if those numbers, just to clarify on the, as an analyst, right? So on the China consumption numbers, remember I showed you all those companies that are manufacturing, the global companies that are in China, right? That's not Chinese companies, that's, global companies manufacture in China. Those global companies, Apple, has to ship a lot to their own facilities. So that shows up in the import numbers, but that gets re-exported as a finished semiconductor. So clearly, if you're putting up tech controls, U.S. companies are affected. What are you going to do if you, how's Apple going to get their, how's Apple going to get their phones out if China's not allowed to import most advanced chips? Where this will work, I think, is I can understand military-specific applications. The troubles with these narratives is I hear it's starting to creep out of military-specific, and this has become a containment effort, economic containment initiative by the U.S., much more than about military, and this is where it's going to fail badly because it's going to affect U.S. companies even more than China. So as far as I jumped ahead to your other question, but in terms of onshoring into the U.S., so the situation today is U.S. companies have gotten out of manufacturing. Press releases are cheap. Intel can talk about fabs in the U.S. You don't build a fab unless you're executing. They're not executing on 7 nanometer. They're outsourcing 3 nanometer to TSMC because they have to. And they've announced their own foundry business. When an IDM, integrated maker, announces their foundry business, that's usually their beginning of their exit of manufacturing because there's nothing else to do with their fabs. Oh, we're going to do foundry. So Intel's done. U.S. manufacturing and chips is done. Now the question is, can TSMC do their magic in the U.S., right? Okay, oh, maybe, right? Not. Okay. Morris, so they tried. Arizona is a lot of money. They have a small pilot production facility there. They've dealt with unions, now EPA, all of these things they did not foresee. And you would think that companies and lawmakers would have been a little more supported from Apple. But TSMC had to go to all their customers and say, will you pay 30% more for chips to Apple? And there's only 3, AMD, NVIDIA, and Apple, the only ones that signed on to Arizona. And they all have agreed to higher prices. But again, corporate America is a little bit, I find, a little bit quiet in this debate. I think they're afraid to open their mouth because of populism in the U.S. They're afraid to open their mouth too much about how ludicrous the CHIP Act really is in terms of trying to replace what they can do in Taiwan. So I think the outcome there is going to be, yeah, they'll eventually get some production up. TSMC that has been visited over the last decade by the Department of Defense, build fabs in the U.S. TSMC, no thank you, no thank you. But finally, they really were pushed very hard to get that done, and they did it. And it gets the DoD off their backs a bit, but
And I think you're not going to see big volume, because why would NVIDIA pay 30% more when they can make it in Taiwan today, right? So again, I think you'd want to get strategically some production there in the event of a worst case scenario, a hot war, which would be a 10-year global recession. If that happens, let's hope it doesn't. Then yeah, you have some infrastructure to get this going. But as you can see, I'm pretty opinionated about this.
Yeah, so that's clear. You don't think Ohio or Arizona works because they'll be 30% more expensive. And I think you talked a lot about the supply chain and the disaggregation of the value in the supply chain. I presume that's what's causing the 30% premium that you would pay in Arizona and Ohio. Maybe you can elaborate on the supply chain.
Yeah, no, thanks. That's a great question. Wow. So where do you start? Investors that would ask this question, as an analyst, you can talk to a range from generalists to specialists. You have to be able to address all. And the answer I like to give to a generalist is so UMC, which was TSMC's competitor, it was a bigger customer than TSMC when they started the business, was in the same industrial park, knew everything TSMC was doing, could hire anybody they wanted from TSMC if you paid them enough, and still went from as big as TSMC to a marginal player. You saw them on the chart. They're about 5%, 10% share and of legacy technology. So there is a lot of secret sauce in this business. To bore you with a few more, massive infrastructure around you of experts. Again, it's a material science business. You have every global chemical company in the Hsinchu Park. The equipment companies, ASML, all of the equipment companies, they're in Taiwan, right? They're supporting TSMC. So those are U.S. companies, and Europe, they're in Taiwan. The DRAM players, you would think the U.S. could do DRAM, which is a commodity. They've ended up being, the best producer in Japan and in Taiwan from, Micron that's moved their fabs. So I'd say infrastructure, culture, that's a manufacturing culture. I think the U.S. has lost the manufacturing culture. A matter of focus. And if one little problem happens at 2 in the morning, Morris, this is quoting, Morris, kind of used this quote, 2 in the morning, we can get someone to go fix that little problem. In the U.S., you have to wait till 9 in the morning. Just that kind of little factor there adds up because it gets multiplied over a $10 billion fab, right? You got to make sure these fabs are used. So I'd say culture, infrastructure, and people.
No, I would agree with that. I think one thing I would supplement what you said is I was looking at a research report, a semiconductor sector research report by one of the bulge bracket firms. And I was counting the number of semiconductor infrastructure, TSMC ecosystem related companies that were listed in Taiwan, Hong Kong, and China. I counted 80. There are lots of companies that I didn't recognize. And there probably is another 80 which is not listed that are private. So a lot of people don't realize, but the reason why TSMC is so successful in Asia is they're surrounded by all these other companies. And they're not in the U.S., right? So the U.S. Fabs in Arizona and Ohio are going to have difficulty. Right. Not to mention the fact that if 60% of the chips are actually consumed in China, that means you actually have to make the chips in the U.S. and export them to China while you're trying to sanction China.
How does that work?
So it'll be challenging. Okay, so I think we can take some questions later on this objective number 1, but I think we're definitely in agreement in terms of the challenge that the U.S. has in order to do what they've actually failed at for the last 20 years, which is to...
And mind you, they failed at, but they've benefited. So
sure.
So, the U.S. companies have chosen, and benefited, have been happy to move up the values. We're the leader in software and internet and applications, and the market cap of U.S. companies is phenomenal. So what I'm saying, this is a win-win for everyone. This disaggregated supply chain, and the reverse of that, it would be a lose-lose. So, and it's been a conscious. Conscious decisions by companies to outsource to TSMC, and it's freed them up. I remember I was at a trade show and TSM guy asked Qualcomm, "Will you ever build your fab? You're big enough. You're our biggest customer. You can build." They said, "Yeah, we could, and we could make it work." But then we become a manufacturing culture. We want to be a design IP driven market changes. So again, complexity increases. The rate of complexity is going to continue to increase on the technology side and on end markets. And the disaggregated supply chain works. And all these little companies that you talked about, these are guys that maybe worked at TSMC, and there was a little problem, like Photo realizes, let's go start a company and we can do this ourselves. So this is how a disaggregated supply chain actually works.
Okay, let's move on to the second objective, to contain China. US's policies to contain China, whether it's capital or technology or using their influence with ASML, et cetera. Let's talk about how successful they'll be at this objective. So everybody's heard about the Mate P60, by Huawei, and they've been able to work with SMIC to use 7 nanometer technology to build the Kirin chip, Kirin 9000. What do you make of that? Is that real progress that's going to continue, or were they lucky, or how did that happen?
This is a great example of like the narrative, right? Because when this gets announced, then it's, like China can't do it, and US looks dumb, and it becomes another drama when that hits the headline on the 7 nanometer. And this is all just because we're in this, this era of this narrative, which is quite dangerous. Yeah, the reality is the manufacturing of that, the yield on that chip is very low, and the government is pouring a lot of money into SMIC to just, when you have a low yield, to make more chips, you just need more equipment, right? So you're just adding expensive tools. So in the coming quarter, you're going to look at the net income of SMIC. It's going to be a disaster. So, as we talked about, Ken, like what that means is inefficient producers are the winners. The marginal players are the winners. So SMIC will get money, and they'll be able to make some of the chips, and Huawei will get them, but it's not sustainable. And because then how do you go, what about the next node? Yeah. So key success factor, profitability is one of them, because economic models of negative returns ultimately just won't work. So 7 nanometer will get into Huawei to some extent. It's a one-off, but there are hundreds of chips and hundreds of applications, and it's not as though TSMC is standing still. They're at 3 nanometer already. And Huawei also needs, they need the latest version of Android. They need all this. So, China's got huge headwinds as well, right? So both countries need to come to the table.
What about semi-capital equipment? We hear a lot about the U.S.'s efforts to influence ASML, which makes ultraviolet lithography equipment. They've restricted all EUVs, which is the most cutting-edge lithography equipment going to China. They're still allowing DUVs, which are less sophisticated. Is that a strategy that will successfully, hold China and contain China's industry?
It's a very advanced tool that China is marginally using, as it is. So, and there's hundreds of tools, and scale. So in the absence of scale of manufacturing, kind of the controls on the capital equipment are not that meaningful. I would be much more concerned about the chips, because that if I was China, I'm concerned about access to the semiconductors to build the data centers that they need, especially the AI machine learning, because China is very strong in software and internet, and that they would really benefit from, at a consumer level, really benefit from AI machine learning chips. And to say that there's military applications, for that, well, there's still, if the military wants, if the military wants AI machine learning chips, they can get them through Abu Dhabi, and there's not a lot, and the military doesn't need that many. They will get them. So to restrict like all of the China market is an economic strategy, right? And it doesn't really, it's going to hurt. It'll hurt TSMC, it'll hurt NVIDIA. Finally, Jensen Huang said something. The U.S. corporates have been far too quiet on this, and it's merely going to hurt U.S. growth. It is really not going to impact China's military whatsoever.
So let's hypotheticate, right? If the U.S. did not have any restrictions on China's semiconductor industry, no restrictions, you can get as many machines from ASML as you want. BlackRock and Fidelity, he can invest in SMIC, blah, blah, blah. where would they go from their 7%? Would they be flat? Would they be going up? Would they be going down? What's your view on the Chinese ability to grow?
Well, everybody would grow faster because the supply chain, but I will answer that specifically. Yeah. So the answer, I think it would maybe go to 10%, of the semiconductor companies. But the semiconductors themselves, those are design companies. They use TSMC anyway. So it's not as though making stuff in China helps them that much. They, small players are not successful. So Chinese chip design companies, they'll use TSMC anyway. But where I think ultimately we would be able to put the grease on the wheel here, and we'd be able to continue to drive down costs in the industry. Innovation would accelerate because of taking AI and machine learning and overlaying it over consumer communications, PCs, overlaying it all the electronics, and China's awesome e-commerce, media industry, would be phenomenal. China would grow, the economy would grow. They could buy more of our stuff again, just like we used to do in the last 30 years, right? When we were globalization, it was definitely economic growth helped all of us.
Okay, I get it. You're not that bullish on China, and you're not that bullish on the U.S. In terms of their ability to onshore. You're bullish on TSMC continuing to succeed and continuing to dominate, right? That's what you think. So am I getting it right?
Well, they can't. TSMC ultimately their success, and by the way, I forgot to put in the disclaimer. This is all of my own opinion. This is no reflection of my fund that I'm managing. I'm not advocating. I'm not pitching any stocks here. This is a public industry conference. Sure. But TSMC is ultimately the winner and the loser in this from the standpoint of the end demand of the electronics, and they're pushing costs down, but everybody else the whole part of the supply chain needs to continue to function effectively to take cost out of the system and for innovation to continue. So I think they lose too by these controls. And you just jogged my memory that Warren Buffett sold TSMC, and I think he held it for a short period. I think he quickly got wind and was concerned by the behavior change that TSMC has to take under this environment. And that behavior change is not typical TSMC, highly disciplined, fabs in 3 parts of Taiwan, clusters of fabs. Going away from that and putting something in Arizona in the desert, it is not something that TSMC would have done had they not been under severe political pressure to do so.
So maybe looking at it from a slightly different angle, with the emergence of AI and the importance of AI, what's that going to do to the picture? What happens if NVIDIA, as they are being restricted from being able to supply GPUs to China, is that going to affect China's ability to compete with AI or the chip industry?
So chip industry, China's negligible now. They've tried 30 years, and the global industry is consolidated due to the economics. So that's just a global trend. But on AI, this is big concern given the size of the market, as you talked about. I think Jensen Huang spoke of it yesterday, and this is going to really restrict the if you think about all the knock-on benefits of AI as it ripples through manufacturing. Everything's made in China. The manufacturing sector in China that would massively benefit from AI, that produce cheaper stuff for the world. All right, so just restricting NVIDIA has a massive impact on China's ability to cost down and produce things, and create global deflation that we had for 30 years, right? So these are all highly inflationary policies that that the U.S. is implementing.
And then hypothetically, just to be provocative, if China was to invade Taiwan, what would happen to the industry?
Blockade of Taiwan, That's not the first time I've got that question. I think for 17 years at Merrill Lynch, you know, it's a great question, right? So what happens? What asset class? In fact, I was on the morning call, Brent. I was on the morning call talking to New York, and I got a question. What happens if there were some Scud missiles going over Taiwan? And I answered on the call, well, there isn't really any asset class that I can think of to own if there was a war other than gold. And I got an email the next day from compliance complaining that I should not talk about asset classes that are outside of technology, which was advocating gold. But bad. I mean, that's. I think China's smarter. China's pretty smart. You know, I think they would be the one to lose the most from being cut off from Taiwan, given the size of the manufacturing. It's the production base of the world. So mistakes can happen. Dictators can have bad days. Who knows? But it would be probably the worst events since probably the Second World War, to be honest, economically.
That was great. I think we got you off the fence. I think we know what you think now. So let me give a few concluding quotations from Jensen Huang of NVIDIA, and then I'll open up the floor for questions to the audience in case anybody wants to have any questions. But I thought these quotes from the FT from Jensen Huang, who's the CEO of NVIDIA, was very interesting and also, I think, in line with what you're saying. So one thing he said is if China can't buy from the US, they'll just go build it themselves, right? The second thing he said was blocking the US tech industry's access to China would cut the CHIPS Act off at the knees. So he obviously doesn't think the CHIPS Act is going to work. And then the third thing he said was if American tech industry requires 1/3 less capacity due to the loss of the Chinese market, no one's going to need the American fabs and will be swimming in fabs. And then the last thing he said, which was quite equivocal, was the independence of the supply chain is not a real practical thing for the U.S. for at least a decade or two. So he clearly is in your camp in terms of, you know, Arizona and Ohio, which I thought was interesting.
And I wish we would hear from all the others.
Yeah.
Tim Cook and the likes of
Yeah.
Google,
I doubt it.
Microsoft.
I doubt it.
But we're in the area. We're in woke electronics.
Yeah, I doubt it. Okay, thank you. Any questions from the audience? We probably have time to take a few. Yeah.
Well, thank you very much indeed for all these insights. I'd like to take the second question a bit further. Now, because of this semiconductor stranglehold on China, Beijing is putting all the stops to grow this self-reliance in technology. We're not talking about volume here. We're talking about cutting-edge technology. So it seems that there are certain bottlenecks within this bottleneck. The first one is the light source, because there's the light source that is the cutting edge of the cutting edge in this high-end chips production. If you can produce the light source using another means, well, that is a breakthrough. China's call is sort of how to overtake or leapfrogging the technology. The second thing is that you can use existing technologies to produce high-end products. It's called packaging. So if you use packaging technology, and you don't have to rely on these high-end machines. The third one is material. Graphite, for example, is another material that's going to change the game. Now, considering China has been successful in building its own space station from scratch, you know, I won't rule out China's ability to really produce something either by passing the existing bottlenecks. So I'd like to hear the experts' views. I'm not a technology expert, so I'd like to really hear some experts' views on this.
Yeah, I think the lights, the laser for the EUV. But you're right. I think there'll be some selective wins here and there, but very marginal. and it's memory. They've kind of been able to pick up the memory area a bit with NAND and memory. So there's a pretty big memory player in China now. So that's an area where they've made the most progress. Memory's a standard product, but there's just too much secret sauce in the logic side of semiconductor manufacturing to actually be able to scale this. And just keep in mind, let me remind you that at DataQuest, we did consulting for China and how to build the industry. They tried it 6, 8, and 12 inch. They've been doing it a long time with access to everything. And it's not about China. U.S. is out of it, Europe's out of it. And, it's just not a China issue. It's a difficult thing to do. It requires thousands of engineers and coordinated teams and a lot of in-house IP. So it's largely about know-how, not IP. IP is something you patent. It's the know-how, and it's the know-how of your ecosystem around you that makes it challenging. So again, they've been UMC, as I said, across the street from TSMC, had access to everything, and they really were able to make this work on a large scale. But I agree with you. There's going to be creative workarounds. You can put a lot of chips on a board that are like GPUs and have more low-end GPUs to do some AI, and China will be able to do one level of AI. But what I'm saying, it's all going to be a lot more expensive to do that in-house for China. So, better to get the leading edge.
I was going to add to those comments. I agree with Dan. It's hard to bet against TSMC. They've been doing it so well for so long, and they've kicked out everybody else out of the industry and become the dominant player in leading edge. But I would say for China's success in the semiconductor industry, it's not just about leading edge. Huawei, look what they did with the Mate P60 with 7 nanometer by retooling the DUVs without a EUV, right? So the workaround was able to deliver a consumer product which actually is outselling the iPhone in China, and people who have used it, rave about it. So I think I actually think the U.S. is making a big mistake because they're leaving a vacuum in China in this industry, and when you're not getting the best stuff in China because the U.S. is not letting people sell that stuff to you, the companies in China actually have an opportunity to innovate, like you said, whether it's in packaging or in materials or whatever, and they might not actually produce the leading edge. But if it's good enough for the consumers in China, it'll make money. And that margin is going to generate resources for China to reinvest in the industry and to grow from there. So I actually think the U.S. Policy against China is inadvertently creating a more competitive player in China over the long term because they're leaving empty space for the Chinese companies to take over. Other questions?
Hi, I'm Nicholas Gordon. I'm an editor with Fortune magazine. We've talked a lot about the leading edge, but it sounds like there's an increasing focus on more mature chips, on legacy chips. I think the Congressional Committee on China, something or other, has sent a letter about this. So it sounds like more attention is being paid on legacy chips, how they're being made in China, probably some discussion about onshoring that production too. I assume the economics of that are even worse than the advanced chips. But kind of like what's your thought about this nascent drive to extend these arguments to the legacy chip industry and to mature chips?
Even more stupid? I don't know. But so moving legacy stuff to the U.S., that has replication. That's just going to have huge repercussions throughout the entire global technology supply chain, including the U.S. customers of that. So I think it seems like we're getting the level of irrationality that, and we've seen this before, where the tech executives are just going to have to step up or miss numbers or see their share price go down, right? Ultimately, when they can't run their businesses. Micron, there's tons of examples of this. Micron was always accusing the Koreans of dumping DRAM again and again. And so they wanted tariffs on Korea, and they were bitching about it. But the U.S. HP and Dell were happy with cheap semiconductors for Korea, so they lobbied to Washington to fix this. So, it's noisy. Ultimately, though, it is an open, free market, democratic, semi-democratic political system, and lobbyists and economics are ultimately, I think, going to play out, in my view, as they always have with regard to these trade wars.
Yeah, I totally agree with Dan. I mean, if you look at the chip industry over the last 20 years, it's really been the epitome of capitalism. The supply chain, the disaggregation. People talk about Moore's law as having more transistors on chips, but I think Moore's law also has to do with cost down, right? Having costs come down year after year, so that you're making chips, perform better at a cheaper cost. And the capital, as we know, will always flow to the lowest cost producer, and the orders are going to flow to the lowest cost producers. So if you move all this legacy chips to onshore in the US and produce at 30-40% more expensively, nobody's going to buy them. Don't forget, China is consuming 60% of the chips in the world. So you can say they're good at producing at a low cost, but they're also good at consuming at a low cost. There's no way those consumers are going to buy a more expensive chip from Arizona if they can get it, cheaper from Taiwan or from China. So ultimately, if it's a cost game that we're talking about, not just a technology game, it's actually both. You'd bet on China to be a lower cost producer in anything over the U.S. in the long run, any day of the week.
Why has Samsung not been able to compete effectively in foundry? Is it because they are viewed as a frenemy, so they don't have a trust with the customers, or is it execution? And I ask that because in a block case scenario, it'll be a bad scenario, but Korea could be a emergency valve for the world in a sense, right? In terms of producing semiconductors.
Yeah, no, thanks for that. And I was going to use that as one of the examples of the challenge of vertical integration. Again, what Samsung faces is they are the manufacturer for themselves for their handsets, advanced chips, but then they've been tried to get Qualcomm business and others, and they were able to get that business by saying Qualcomm will use your chip also with our chips, and they kind of play games, and people had used Samsung as a price check on TSMC. But they're not a pure play. So there is that chart on TSMC, customer trust was one of their key success factors, and they lack that. They are struggling on the technology too as well, on the 3 nano. TSMC is taking share as well. So this is vertical integration, within a company. Think about a government trying to build an industry, even more difficult. Follow up? Yeah. Go ahead. I can hear you.
So it's a technology question. So we're kind of facing the laws of physics, right? We're 3 nanometer, 2 nanometer, I don't know. So we're just running into laws of physics. So what happens? What happens?
Yeah, great question. I remember I got that question at 1 nanometer. That's how old I am. At 1 nanometer, so we can't go below 1. Right now we're at 3 nanometer. So different aspects change. The transistor design is actually now going to change. So they went from planar, which is 2D, and then they went to 3D. That was a huge change. And TSMC would do that incrementally. Change the process first, change the design. And now we're going to go to gate all around, which will take us below 0. We'll go to sub-nanometer level. The visibility on the physics is at least 5 years now. And that gap that I showed you, TSM versus everyone else, grows because as a monopoly, you get nice prices too. And you have the economics.
I'm wondering if either of you are following the election happening this weekend and who should win.
I can only, yes, I am. Ken can chime in. I'm following because another fund manager was asking me about it. And I ask friends in Taiwan. Peter Kurz is an ex-Merrill guy. He's Mr. Taiwan, Taiwan Chensheng. He's just sent me a text that it looks like Lai is extending his lead, although, as you know, surveys aren't allowed like for 10 days or something. But it looks as though DPP is likely to win. Is that a good thing? Are you from Taiwan? I don't know. That's a political question. In my view, is that it is a good thing because I think, China's got to recognize that the DPP is here to stay, right? And maybe increases the chance of a little bit of a détente. But we shall see. The U.S. is at the center of it, though, right? Did we exhaust you?
Thank you both, Ken and Dan, for your wonderful presentation. And I look forward to having you guys back. I think this topic is literally a hot topic, and it's going to remain a hot topic for, I think, a long time to come. And those of you who are interested, if those of you are not member, join as member. And a lot of times we're going to also have off-the-record discussion. Tonight's talk is not off the record. And sometimes we will have programs where we can really go into it, behind the scenes and all that. But tonight, I learned a lot. And I'm so glad you both are able to give us a really an interesting, view on what's happening with TSMC. So thank you. Now, if you, in the next 10, 15 minutes, we're delighted that we have Ambassador, feel free to go down, and Ambassador Kurt Tong, as I mentioned before, is able to join us. Kurt is somebody here in Hong Kong, really needs no introduction because he was a U.S. Consul General in Hong Kong from 2016 to 2019. And when he left Hong Kong, he became the managing partner and member of the executive committee of the Asia Group. And Kurt just, I think, was in China recently, or in Shanghai, and I think I also know Kurt was in Ohio last year because my alma mater invited him to speak. Kurt was born in Ohio, and although he didn't grow up in Ohio, Kurt has really an interesting perspective now that he is now back in Washington. And, all the talk about Arizona and Ohio, I'm really excited that Kurt can give us kind of his perspective on what's happening this really interesting election year, not only in Taiwan, as we all know, November of this year, the U.S. election is coming up. And, I'm sure there's going to be a lot of questions. So Kurt's going to give us about 10, 15 minutes. And then afterward, he will be around for the drinks. And you can feel free to ask him any question you want. And that reception will end around 8 o'clock. So at this time, I want to invite Ambassador Kurt Tong to come and give us a few words. Thank you.
Good evening, everybody. It's great to be back at the Asia Society. I think you all made a wise decision in coming to this evening, and I was listening very closely to the presentation and panel just now, and I thought there was a lot of real value there, a lot of gems of information that you wouldn't normally pick up just reading the press or the layman's version of the entire debate around the semiconductor supply chain and the role of policy in that area. I thought what I'd do is just give you a little bit of, as Alice suggested, a little bit of a Washington perspective, not a Columbus, Ohio perspective, although I think that's probably the most important perspective, given that it's such a wonderful state and a city where I was born. By the way, that unfortunately the Buckeyes did not prevail over Michigan, and Michigan did go all the way, but they've got another chance next year. So looking at Washington, you need to think about the players and the objectives of each of the set of players in the discussion around this semiconductor supply chain and what they're trying to achieve. So on the one hand, you have Congress and the defense community / national security community hawkish folks, very, very strong voice in Washington, especially as U.S.-China tensions have grown over the last 5 years. And that group has a variety of views. It's incorrect and inaccurate to describe them as a monolithic force, but the general direction of pull from that group is, as was described in the discussion in the panel, to reach beyond the mere question of technology denial for military purposes and leaning into this question about containment for economic purposes. And so when you listen to hawkish folks speaking on these issues over the coming years, months and years, listen to see what their objective is, and that should be the first thing in your mind. Is this person interested in slowing down the growth of the Chinese economy, or is this person more narrowly focused on specific technologies which are of utility to the Chinese military and is focused on those because of the threat to the United States and its interests coming from the Chinese military? That's the benchmark for studying that group, and it varies from one to the other, but the direction of change is towards more ambitious goals, as was described in the discussion and the panel, which is starting to hit up against reality and what can actually be achieved in this area. On the other side, you have industry, which I know more closely these days, working in the private sector and doing consulting work. And they would like to do what industry does. You all know what industry does, right? They make money on behalf of their shareholders. And they would like to be in a position to make decisions irrespective of national boundaries in order to achieve maximum return on equity through greater efficiency, smart return on investment decision making, industry by industry, segment by segment, going forward. But they confront now the reality that borders matter, that national security prescriptions and prerogatives are going to shape policy, and they're playing in that milieu. They're in there. One of the comments I had on the discussion earlier was, why aren't these companies speaking out? Well, they are. They're just not doing it within the earshot of the general public. They're highly engaged, and we're very engaged, for example, in the crafting of the CHIPS Act. And so sitting at the fulcrum of this debate is the White House and by extension, the Department of Commerce, that is trying to come up with some reasonable, rational, and hopefully not too counterproductive sets of policies to try and accomplish the objectives of, first and foremost, military technology denial, and second, supply chain independence. Another comment on the discussion, I don't think that, I very rarely hear anyone driven by market share objectives or the 7% market share question, or that being the issue at stake, because depending upon which segment of the semiconductor supply chain you're talking about, it's not 7%, right? In semiconductor design, for example, it's much higher. But rather, the issues at stake are this, is the U.S. independent? Does it have supply chain independence? And that whole question about supply chain security, of course, has gotten massively amplified by the experience of COVID. So in that context, what we saw in the last couple of years, and 3 years under the Biden administration, was this grand bargain that was reached between the companies and the administration and the Congress to basically give them $50 billion in return for acquiescing in a certain degree, intensified degree of technology denial policies, primarily implemented via export controls. My own view is that thinking about the supply chain and the overall process of first designing and then coming up with the manufacturing equipment that can accomplish the manufacture of said design, and then manufacturing, and then packaging and distribution, and having that all made into actual products for consumer use, where China is a dominant player in that final stage of the semiconductor to product to, less than $1,000 cell phone supply chain, that process is extraordinarily complex, massive in scale, and if you put that against the scale of the CHIPS Act and against the scale of the export controls which have been implemented to date, it's actually chipping away at the edges, if you'll pardon the pun, unintentional, chipping away at the edges of a supply chain which is actually still driven primarily by the need to produce efficiently and at cost and effectively to match designs, to come into products, to actually create revenue, to drive the entire chain. But it is getting enormous amounts of attention. And there's a question about where does this go next? So thinking about 2024, where this goes next, I think, is continued, and I'm speaking again in a Washington context, continued focus on export controls as the main debating point for policy going forward. You've all heard I assume most of you have heard this phrase of small yard, high fences as a justification for U.S. export controls policy that is carefully targeted within a certain set of technologies and very effective, all right? And that is, of course, under constant bombardment from the most hawkish people who would like the yard to be the size of a football field, and the companies that would like it to be more like my backyard in Washington, D.C., where you can cross it in a couple quick steps. And then the fences question is extraordinarily important because these rules, once they're created, have to be enforced, and they also have to be sensible, and if they're not sensible, people will find ways around them with even greater energy than they would otherwise. Now, that debate will continue throughout 2024, and this is where some political context is important to establish. The Congress will not pass much legislation in 2024 at all, and I think is quite unlikely to pass much legislation in this area as well, because of the various divisions within the U.S. political system now, particularly in Congress. You've got divisions between, you got two parties, you got two houses, you got at least two sub-parties within each party, and then you got a lot of committee heads, and then add in that a little bit of egos, and you come up with a situation where it's really hard to pass legislation, much less keep somebody in the speakership. So don't have high expectations for congressional action. However, from the administrative side, from the White House and the Commerce Department, there is ongoing thought about what to do next in the semiconductor space as well as other areas of high technology. So I would recommend that people pay attention to the fact that the White House in its investment restrictions executive order included high-end semiconductors, where it still has yet to define exactly what that means, but also artificial intelligence and quantum computing as a real area of emphasis. Now, I personally am quite skeptical about the ability of anyone to figure out how to do an export control on artificial intelligence. A lot of the products are free online. No one's quite sure what AI is, and at the end of the day, it's a lot of math. So it's difficult to figure out a way to control that as an export, but I think the U.S. government's going to give it a good try, perhaps in 2024. They're also debating whether to branch out beyond this whole area of high-end computing into areas like biotechnology and other sensitive technology areas. I'm a little more skeptical that will happen in 2024 just because of the difficulty of exploring those rules would be quite hard. But the fundamental problem that the administration confronts, together with allies and partners around the world on this targeted small yard, high fence technology denial strategy is that the low-hanging fruit of that effort has already been harvested. The low-hanging fruit being the fact that in semiconductor manufacturing equipment, there's only 6 companies in the world, and they're all located in the United States, Japan, or the Netherlands. And that is like the perfect problem set for the United States to try and orchestrate in terms of technology denial towards China. And they came up with some measures which have been effective. Now, in some ways, as was pointed out in the discussion, it's generated side effects which undermine both the effectiveness of the rules as well as the long-term competitive position of U.S. and other industries in China. But nonetheless, they've been significantly disruptive to the industry. So specifically, what else might happen in 2024? There is extensive discussion about trying to deny cloud computing capability to Chinese actors. I think that will be very difficult to accomplish, but there may be a try at that. I do think that there will be more work done to try to make it harder for the borderline chips that didn't make the cut for export limitation, many of them made by NVIDIA, to have those shipped into China. There will be effort to try and bring those within the realm of enforcement. And I think perhaps the biggest effort will be in enhancing the resources of the Department of Commerce in order to implement all the regulations and restrictions which have been established thus far. So what does all this mean looking forward? You can look at it from a couple of perspectives. I want to repeat the point that the semiconductor supply chain is extraordinarily complex. And so going after one part of it doesn't necessarily impact others. The chain can adjust around it. And the technology moves every few months and changes the goalposts around which people are trying to limit the technology, and et cetera. So my own sense is that the efforts to shape these supply chains, either through the CHIPS Act and subsidies, which, by the way, are being carbon copied, or not carbon copied, but followed as well by Japan, by the Republic of Korea, and frankly have been followed all along by Taiwan. Those will continue. And at the same time, there will be efforts, probably further efforts on the export controls front, that the overall impact on supply chains may be smaller than some people worry. And there is the question about whether that has any real impact on the military balance at all at the end of the day. But the fact of the matter is, none of us want to pay $10,000 for one of these things, right? And so complete onshoring and complete security of supply throughout every step of the process of manufacturing such a complex item as advanced electronics in the current day, I think, in my own personal view, is quite difficult to accomplish. Will Washington continue to try to do so? Yes. Will it succeed in its objectives? That will be more difficult. Will it result in massive inflation and disruption in the industry? I'm a bit skeptical about that because I think the market has a way of moving things in ways that do make sense. So last couple points, and then I'll let you guys get something to drink. This same exercise that has been happening around the semiconductor supply chain over the last 3 years, I think is about to be replicated in another major endeavor or industrial space, which is new energy vehicles. Everything from the upstream materials and minerals through the processing thereof, leading into batteries, leading into the machines themselves. It's going to be an enormous battleground for conflict in trying to control those supply chains and get them to maximum advantage. And China is right in the middle of this because it is in a much more advantageous position in each of those things I just cited than it is anywhere in the semiconductor supply chain. You know, it's a major assembler of final goods using semiconductors and manufacturer of low-end semiconductors, but its position in this new energy supply chain is much stronger. At the same time, this new energy supply chain is much more important to mankind for climate policy reasons than whether we communicate a few minutes faster on our cell phones and get to watch more videos on them. So I think this is going to be a bigger issue set, actually, than the whole semiconductor supply chain activity. And I would watch this space for some real fireworks in international affairs because of the strong position of China, but also because there are strong counter-arguments to trying to achieve supply chain security in that area, and the politics of assembly and creation of new energy vehicles and new energy technology are actually more powerful and more infectious and involve more people than is the case for the semiconductor supply chain. And then the final overlay, which I think should be obvious to any of the American citizens in the room, is that this is all going to be super political, and 2024 is going to be a messy year, but I gave you my policy expectations for what will happen in the semiconductor supply chain space in 24. In 25, I think it's much more of an open question which direction it goes. Given the significant possibility that there will be a change in administration in the United States, there could be significant policy changes that frankly could go in the direction of further restriction and attempts, and even stronger attempts, to shape and bend and twist the semiconductor supply chain, or not. Or we could see things go in a completely different direction. So I think, you know, all of you are right to follow this space very carefully. I have the benefit of not having sufficient resources to, like Warren Buffett, to make any big bets in this industry, and so I'm not going to lose any money. But those of you that take big bets, good luck to you. All right. So on that thought, let's perhaps break and have some drinks. Okay.
Drinks awaits you, and thank you all for being here. And you know, any question for our speakers, continue discussion, please feel free. Thanks so much.